Let me bring in our hypnotist, Marshall Silver.
It's Marshall Silver, ladies and gentlemen, the world's fastest hypnotist.
It's all about the money, baby. Money cures most things. So many people don't realize how important it is to make money because they don't want to be thought of as greedy or selfish or materially centered. And I'm telling you, those are broke people, never rich people. Rich people never, ever, ever diss money. They have a good relationship with money, and I want you to have a good relationship with money. In fact, I'd like to be the key to set you free, in the words of Houdini. And how we do that is every single day that I'm available, 5 days a week, Monday through Friday, right here at Studio Money. We give away cash on the Marshall Silver Live show. It's really pretty simple. All you got to do is go to marshallsilverlive.com. If you're watching me on a different social media platform, go to marshallsilverlive.com and register for an account. When you do, you'll be able to check in with the show. You'll be able to send out your affiliate link. That's an affiliate link that was made specifically for you so that when any of your friends click that link, we know that you referred them. When you call into the show at 877-SILVER1, every single call that gets through, you're going to make $100. When your friends call in, they'll get $100. All of them, every single friend you have, or both of them, depending on the case. When your friends call in, not only do they make $100, you'll also make $20. So how cool is that? Why do I do this? Number one, it's called velocity. The speed and frequency in which your money changes hands is velocity. So I want to increase your velocity, my velocity, everyone's velocity. Everybody wins. But here's the second reason I do this. I'm going to have to pay money out to market my show. I'm going to have to spend dollars marketing the show. And if I'm going to have to spend dollars marketing the show, guess what? Mark Zuckerberg, he has enough. Larry and Sergey, they have enough. You know who doesn't have enough? Me. You know who also doesn't have enough? You. So I'd like to just give the money to you, let you spend that money as you see fit, and together we're going to build this thing huge. Now, I was talking last night with producer Gary Christmas, who produces this show, and we were chatting about a couple of things, and I want to talk about both of them. The first thing I said to him is, he said, what's your long-term plan for the show? I said, my long-term plan is to keep doing what we're doing, keep engaging people, getting them to call in, ask questions, have their lives be better, bring in really cool guests. I said, but as far as the money is concerned, when we hit 1,000 regular viewers, simultaneous viewers, when we hit 1,000 simultaneous viewers, instead of giving $100 to every single person that calls in, I'm going to give $500 to every single person that calls in. When we get to 10,000 average viewers on the broadcast on a daily basis, I'm going to give away $1,000 to every single person that calls in. That's thousands of dollars every single day. When we get to 100,000, which we will, yeah, we're going to give $5,000 to every single person that calls in every single day. $20,000, $25,000 every single day. What is that? 100,000, 125,000 a week? And I couldn't be happier to do that. So you're going to be a part of this. We're going to grow this together. And not only are we going to have a whole lot of fun growing this together, we're also going to make a whole lot of money. One more thing I want to chat about before we bring today's guest out. And today's guest I am particularly excited about because it's timely. The guy's a genius. He's involved in many things that are very, very important to you. And if they're not important to you right now, they should be, and they will be by the time the show's over. So we got Troy Fullwood coming up here in just a few minutes. One last bit of business, though, before we dive in. One of the other things I was talking about with Gary Christmas, the show producer, last night, is I said, do you think that there is a power in the autonomy of a phone call over the vulnerability of a video? And here's what I mean by that question. I've been doing what we're doing right now in many different forms for many, many different years. And at one point, I had a radio show. And the radio show was a call-in radio show way before digital, way before what we're doing here today. And people would call in and they would ask me questions. One of the things that I noted is that when they were calling in and asking me questions on the air, that I couldn't see their faces, of course, because it's radio and it was via the telephone. So I couldn't see their faces. I didn't know who was calling me. But I was talking about some of the calls that I got during that time. And I said, the calls would be pretty wild. Somebody would call in and say, I was molested from the time I was 5 years old till I was 18 years old. Or somebody called me one time and said, I used to rob houses for a living. I used to break into people's homes for a living. And obviously they wouldn't want their face showing because they could get arrested. People would just give me things, say things, ask questions about things that I'm positive if there was a video on their face, they wouldn't want to do. So there's two things that I was thinking about. And I thought about this a lot last night after Gary left. And he was at the house late last night. We had a lot of great ideas, a lot of good stuff coming down the pipeline for you. But I was wondering, and you can tell me in the chat, if you're watching this on social media, the chat shows up in one stream for me, so I'll see it. Tell me in the chat, before we get started with today's show, if I were to make available to you the opportunity not only to call into the show at 1-877-SILVER1, get on the air via video call, which is what we're doing right now. If I allowed you to get on the air with just an audible signal, meaning a phone call, not a video, would that make you more comfortable calling in? Would you want to do that? But here's the other thing. And here's the reason that I have a slight hesitancy. Otherwise, I could care less. I could Dave Ramsey it all day. Dave has calls. The calls come in. He doesn't have any video. But here's the thing. The reason that we've done video is I want the calls to be authentic. I do. And if the video calls are coming in, they're going to be to a higher degree at least. I'm sure there's ways that people could game the system. Heck, I could game you. I could hire people to call in. We don't. But we could. With a video phone call, though, I can tell who I'm talking to. I can see them. I can see their surroundings. I can see their face. With an audible call, I cannot. And I said, the only challenge I have is I want to know who I'm talking to. I don't care that the public knows who I'm talking to, but I want to know who I'm talking to. And producer Gary said, well, what if we paid less for a phone call than we do for a video? We rewarded the phone call $50, say, and we reward the video call $100. I said, no, I'm not sure that I want them to feel like second-class citizens. So my opinion is either call in on video and make $100 or call in on the phone line and don't make anything, because we'd prefer you to call in on the video line. I said, but there are some things, some questions that I'm positive people will have that they won't want to disclose who they are. They might want to use a pseudonym. So here's the other option, and this is what I'm thinking. We haven't done anything. I want your feedback. If you think that you would be better off calling in on a phone line to discuss sensitive matters, then I'm all for hearing what your personal opinion is. But the other option, and this could be fun, and I was thinking about this last night. This could be lots of fun. The other option would be that if you have something sensitive and you don't want anybody to know who's asking the question, you could put on a mask. You could cut out a paper bag. You could do the unknown comic route, cut out 2 eye holes and a mouth hole, and then call into the show. You could do that. I think that would be kind of hilarious, actually. I think it would be kind of fun to watch what creativity people come up with on their masks. So that's another option. So we're not set in stone at all, but I do want your opinion. So in the chat, tell me, what do you think? Are you okay with the video? Do you think people should just call in on the video? Or do you think that some people might have things they're dealing with, challenges that they have, that would be better served if they were able to call in audibly? I don't care either way. I'm giving the cash away, except I just want to figure out a way to inspire people to play full out, to be fully committed to their own success. I also realize that a lot of people consume this show on their phone, on their phone. And it might be easier for people to just dial a phone number than it would be to get on a video. They might be in places where they are not able to show video, out in public or wherever. So let me know in the comments, and let me take a little look at the comments while we're chatting about it. Ashay says, video is ideal. Diane Higgins says, I'm okay with being on camera. I like not having to be on camera, although I'm okay with being on camera. Awesome. So I guess I'm no further ahead or knowledgeable than I was before I started the show. But I love you. I love you. That's what my kids always say. Whenever they have to tell me some bad news, hey, do you want to play a game? You want to play Farkle with me? You want to play Monopoly with me? And my kids will go, no, but I love you, Dad. I still love you. So I still love you. Hey, on today's show, Troy Fullwood is my guest today, and he's been in the investing game for over 31 years. He's a master of creative financing and one of the go-to guys when it comes to helping homeowners in trouble actually save and keep their homes. He's the founder of Pinnacle Investments, one of the nation's top buyers of real estate notes with over 25,000 transactions under his belt. In 2007, he helped build Wall Street's first distressed asset fund, delivering strong results while helping thousands of people avoid foreclosure. He's spoken everywhere, from Harvard Business School to NASDAQ. He's a best-selling author of the book, The Power of Paper. This guy knows his game inside and out. Not only that, he's also been training some good friends of mine and their kids, which is one of the reasons that I love Troy so much, is he's got some really cool things to help educate your kids in the areas of investment, something at least I do, and I think all good parents are concerned with and should be interested in. Without any further ado, it is very, very exciting for me to welcome to Marshall Silver Live, Troy Fullwood. Welcome home, Troy. Good to see you.
Hey, Marshall. It's great to be here. Thank you so much.
I know how busy you are, and so I just want to right off the bat say thanks so much, man, for taking the time to not only come out here and chat with me about stuff, but also to take the time to potentially answer some questions from our listeners, because I know that they're going to have a boatload. So to start off with, is there anything I missed in your bio that you'd like to share with the audience before we get rolling?
I think you hit it spot on. One of the things that we're really involved in nowadays is focusing on building wealth for our children. That's like a big thing for me nowadays. I don't play the game for myself anymore. I've figured it out for myself, and it just felt more, rewarding to go in and start looking at things instead of, creating an inheritance for your kids that you just give it to them when you pass away. We're doing something completely different in regards to that. And we're actually teaching them how to build wealth at a very young age. And what's funny about it is they're a lot better at it than I am, because
that might be a good entry point. And I like that a lot. What do you suppose is the reason that young people are better at investing than adults? I have my own ideas. I'm kind of curious what you think.
Well, the number one thing I can put my finger on is they're not as, jaded or tainted. So they've got a much more, pure canvas that they're working from. And so they're looking at things for really just kind of what they are and not getting, caught up in the past or something that's happened to them personally or something, because they don't really have like a lot of, personal experiences at a young age. I mean, they do in regards to family and stuff like that. But outside of that, in the investing world, business world, economic world, they're pretty limited, as a whole. Like their entire economic, experience has everything to do with their parents. How do their parents deal with money? How do their parents manage money? How do their parents do things? And depending upon how their parents function is oftentimes how they function. So it is one of those things where I would say more is caught than taught in that space with children. And so what we've done is we've been very intentional over the last 10 years. I have twin 12-year-old boys, and they'll be 13 in, like 10 days or something like that. Actually, 10 days.
When are your boys' birthday?
February 16th.
We got a lot of February birthdays in my household. We've got my daughter Prosperity the 11th, my wife on the 13th, and my son Maximus on the 25th. And he's turning 13 on the 25th.
Turning 13. So we got some teenagers coming our way, don't we?
We do. So, obviously you've been working with Jordan Solomon and
great guy.
Amanda and Jordan's son, Wes.
Yes.
Will.
Yeah, Will. Uh-huh.
And he's been just kicking butt.
Yeah.
So tell me a little bit about that. And I want to dive into your recommendations, going forward in the next year. Obviously, there's a lot to talk about, a lot going on, a lot of volatility. I saw that silver, and we're going to talk about precious metals. We're going to talk about real estate. We're going to talk about notes and stock market and more. But I just saw silver I bought a pretty substantial position at $30. Obviously, it went up to almost $115. I sold a large position at $115, and then the next day it dropped down to 85. And I think as of today, spot price is like $65.
Yes. Yeah. Exactly.
So obviously things are volatile, and the biggest profits are to be made when things are volatile. So while people get freaked out about their 401k losing money, they weren't worried when it gained double the amount of value in 30 days. But now that it's down 25%, they're freaking out. It's like you never stood up from the blackjack table. You need to understand that sooner or later you got to cash some chips in, otherwise you're screwed.
Yes.
So tell me a little bit more about the program you have for kids, and I think you have it for everybody. I think is amazing. Not only do you teach people, but also when they pass certain parameters or tests, when they trade the way you've told them to trade, you also will fund their trading. Can you tell me more about that? Because that's really exciting. And gosh, you should have an unlimited amount of people lining up at your door with what you're doing. Because when I saw it, I said, that guy is spot on.
Yeah. Yeah. So what we have built out is, and I'll back up, I'll do a little backstory to this. So obviously we come from the real estate space, creative financing, buying mortgages and things like that on people's houses. And that's always been our core business. And it's one that we love, and we're still very passionate about it. I was looking at some deals before we jumped on this call. And but I learned really quickly that teaching that to a 12-year-old or 11-year-old what a note is or a mortgage is really kind of falls on deaf ears because they don't really get it. They know that they live in a house and their parents may or may not make payments on the house, but outside of that, they don't really understand all the working aspects to it. So
that's part of the challenge. Also, the window of time that it takes to complete those kinds of transactions.
Oh yeah, absolutely.
It's not as instantaneous as a video game.
It's not as instantaneous. You can't really gamify it. There's a lot more work to it. It's a lot of times kind of like watching paint dry, where it's very slow process, and that's not always, not everybody likes that. So I understand it, but it's a great passive income model that we have actually been in that space for 31 years. But what got me to thinking about opportunities in the space was my kids. So I started teaching myself how to invest and trade. And what we do is we trade futures contracts. That's what we do. We don't do options. We don't buy stocks. Actually, they buy stocks. They're very good at picking stocks. I'll just tell your listeners here, if you guys don't have this account, go out and get this for your children. It's called a Greenlight account. And it's an app that you can download on your phone. It's free. You can put $100 in there, and you can research things like stocks, and you can buy Bitcoin or various cryptocurrencies. You can even buy ETFs on silvers and gold and stuff like that. But teach your kids. I'm giving you guys a little golden nugget here. Teach your kids to take the Greenlight app, learn about it, have them pick stocks that align with the things that you do. So I would buy Amazon stock. Why? Because everybody seems to shop on Amazon. If they're a big
we
Disney
should buy
fan,
extra stock at my house.
There you go. Buy extra stock at your house
for Amazon.
Exactly. I get it. You're
my
a gold
wife
star.
does her best to keep Jeff Bezos afloat.
You're a Gold Star member, huh?
Yeah, for sure.
Buy, Disney if you're a Disney person. Whatever it may be. Or buy like General Motors. If you drive a General Motors car, if you're a Tesla driver, buy Tesla. Buy things that they can relate to, because that's a great barrier to entry in understanding that you're actually using these products so you can actually make money off of them in their stocks as their values go up. By the way, buy a lot of Tesla going forward. So changing gears here, that's a great way to teach kids how to get started in the investment game. And you can also pay allowances on that and things so there's a lot of cool features. That being said, I got involved in the future space. And when I got involved, I was actually using my own money. And this leads me back to the question that you asked me, Marshall. And that is, I started using my own money. And I was using my own money to the tune of about well over six figures, that I actually ended up losing the game at. I lost over six figures. I won't get into the exact number. of when I started learning.
No,
how to
I
trade
wish you
futures.
would. It would make me feel better about myself.
Well, I lost about 140 grand in about 6 months.
I don't feel better yet. But
I learned,
that's the point, though, Troy. Just as you continue, I didn't mean to interrupt you.
yeah,
But I think that so many times people that go to invest in anything, whether it's real estate or the stock market or crypto, I don't think they understand that the highly successful people lose money from time to time.
oh yeah,
And anybody that tells you they've never lost money is suspect in my book.
yes, absolutely. My actually biggest loss in my career was over 6 million. That's my biggest.
Now
loss.
I feel better.
Yeah, so that was not a fun year.
No, I appreciate you. You did that just for me too. I noticed. Thank you.
Well, I don't like bragging about my losses, but at the same time,
no man, if you're gonna dump $6 million, you better tell that story because you bought it.
Yeah, it was a tough year. That was a tough year.
What year was that?
That was in 2009.
12?
2009. Yeah. Yeah. 2009. Yeah. Late 2009, early 2010.
So it was right after 2008.
Yep. Yep.
Yeah, that makes sense.
Yeah. It was a very challenging year. But back to your original question about using money. So
funded accounts.
After I lost a bunch of money, I said, okay, this is silly because if I keep this up, I'm going to just keep burning money. So let's go figure out another way to do it. So what I did at that point was I called a friend of mine who happens to be the vice president of the New York Stock Exchange. And him and I have had lunch and dinners and things like that over the years on several occasions when I'm in New York. And I've actually been on the New York Stock Exchange floor. I've been there when they ring the bell. I've stood next to Jim Cramer and all of his Money Madness stuff and things of that nature. But what I did is I called him. I said, okay, you got to tell me the secret. This is silly. Like I'm over here blowing cash and it's not a fun conversation at the dinner table. And so I need to figure out a way to, how to say, turn this ship around. And so he told me, he says, this is what the market does every day. And he disclosed what it did. And so I said, okay, great. And he told me how to do it. And I said, okay, great. And so I went to work perfecting that. And he said, don't use your own money. We don't use our own money on Wall Street. We use everybody else's money on Wall Street. So you need to do the same thing. Okay, makes sense. So with that being said, I went out and put together where I was using OPM, other people's money. And now we trade on a little over $1 million on a daily basis in trading futures contracts. And we trade things like NAS and gold and silver every now and again. Silver's pretty wicky. In other words, it moves really quick. So it's one of those things you got to be ready for it. And we scalp the market. We don't stay in all day trades. We don't do overnight trading. We don't, hold things over the weekend. We don't do any of that stuff. We're in and out of things in less than 20 minutes, make our money. We, wash our hands of the deal and we go on about our day. And
so would you consider that day trading then?
I would consider it just scalping the market. Yeah.
Okay.
Day trading is somebody who would get in the morning and then get out before the market closed at the end of the day. So they'd hold it for 5 to 8 hours as a whole. And that's more day trading. Yeah. But
got it.
Yeah. So the cool thing about it was he taught me very quickly how Wall Street trades. He says, these are your supply and demand zones. And this is where they show up on the charts. And it's on every chart out there. It doesn't matter if it's Tesla, eBay, Amazon, gold, silver, NAS, doesn't matter what chart, same thing. And he says, and that in itself, if you just trade that, that's what Wall Street's trading. I said, okay, sweet. That's what I'll do. So set up a practice account, went to work perfecting it, lined up some capital, proved that I could trade their capital. And now we have access to over $1 million in capital that we trade every day. And my boys have their capital. My wife has her capital. I have my capital. And I wouldn't say my boys trade every day. They trade, a couple times a week, depending upon their school schedule and things of that nature. But it's they make a lot more doing that than they do with their allowance. Let's just say that. So they're learning really quickly that they're learning really quickly how economics works, and it's real world economics. And so they're seeing this all day long. and they're understanding the markets at the age of 12, 13 years old. And I wouldn't say they're perfect every day. They lose money some days, so that's not fun, but that's part of the game as well. You're not going to win every race. You're not going to win every football game. You're not going to win every basketball game. And so losing is part of the process, but they've got over an 80% success rate. So with that being said, it's solid, and it's far above what most traders do anymore. Yeah.
Well, and you just hit it on the head. I teach my kids that in all areas. You got to learn how to lose.
Yeah.
And most parents don't understand that, and especially highly competitive parents. They say, no, losing is for losers. You can't lose. And I tell my kids all the time, you got to lose until you figure out how to win. You have to. And if you're not losing at all, you're not pushing the envelope.
Yeah.
So it's the same thing that I feel, about anybody that comes to me and says, I've never lost money ever investing in real estate or in the stock market. And I'm going, then show me the deals you've done, because I don't believe you. I've lost more money than everybody in the room combined.
Yeah.
And I've made way more money than everybody in the room combined. But I know no risk means no goodies. And if you're not risking, you're not going to win.
True.
So
Very true.
I think that's a really good place to start. The other thing I want to point out about the funded accounts that you guys do is that while a person might have access to a particular amount of money, 10 grand, 50 grand, 100 grand, there's still parameters they've got to stay within. They can't lose beyond a certain stop loss, or they get no more funding. And I think that's just so smart, because if it was their money, they would want to do that. It's, again, I use the metaphor of blackjack because I used to be a competitive blackjack player.
Okay.
And the biggest lesson you can have in blackjack is to know when you're in a dip. Same thing with the stock market. Know when you're in a dip. Don't take it personally. Stand up, go use the bathroom, ask for a different dealer, go home for the night, do whatever you have to do, because some days you're just not going to win.
Yes.
And the idea that you could make yourself win, I think, is what gets people in trouble.
Absolutely. One of the biggest mistakes in trading is people over trading. They stay too long, also known as revenge trading, where they think they can make their money back. In your case, in your scenario, like, I'm going to make it on the next hand, so I'm going to double down, triple down, whatever it may be. And I see that all the time. And that's one of those factors between kids don't understand that. Kids don't understand that. Adults, so that's not a learned behavior you typically see in kids, which is why they learn much faster. Adults do that probably more than they think they do. Hence, when they do that, now they have to unlearn that behavior. It's a learned behavior. And so now they have to go in and unlearn it in order to be effective, because you're absolutely right. And you hit the nail on the head. Just because you have 100,000 or 200,000 or $1 million in capital to work with, there are parameters to it. It's not free money, number one. And if you're reckless with it, yeah, you can do some resets and you can start over again, but you're literally going to the back of the line and reproving your ability to be disciplined about the trading, and that you can do it effectively and efficiently. And that's where the biggest challenge is with adults is they will become reckless. They'll allow their emotions to get in the middle of it. They won't pay attention to what the market's doing. They think the market's going to do this and the market does that, and they don't read it and they don't hear what the market's doing. Like, to the example that you pointed, if the deck shifts and you get into a dip, that's that deck of cards. Like, that might be that dealer, might be the deck of cards. And you got to step out and let that kind of, how you said, that dip take its course, and then maybe step back in, or like you said, go home for the evening, come back another day, and know that that day's just not your day. It's not personal. It's not personal. Like, the market doesn't wake up in the morning and go, you know what, Troy's trading today, so we're going to make his day miserable. We're going to steal his money. That's not what the market does. The market wakes up and it does what it does, but it's very pattern based. Like, when you professional blackjack, you can see patterns in the cards. I'm not saying you're counting cards. That's not what I'm saying. That's a different thing.
Well, I'll say it.
Okay, you'll say it. Okay,
no, I'll say it, because, again, just like what you just said, you can't win consistently in blackjack unless you count cards. You have to.
Yes. Okay.
And it's not illegal. They'll just kick you out, which they barred me repeatedly. But it's kind of like, what you do, and I want to point this out, is that you're not – you said something early in the conversation. You said invest in things that you believe in, that you participate in. If you drive a Tesla, invest in Tesla.
Yep.
If you shop on Amazon, invest in Amazon. Invest in things that you consume, because if you're investing in things that you consume, at least you know somebody does.
Yes.
And the likeliness of that stock going up is good. But same thing with the blackjack table, that I would pretend like I didn't know what I was doing. The distinction with blackjack and stock trading is, if you say this is a good stock, you should invest in this. If everybody else invests in the stock that you just invested in because it was working out for you, it doesn't harm you. It actually helps you.
Yes,
if I'm sitting at a blackjack table and I start saying, oh, the table's hot,
Mm-hmm.
then 5 other morons are going to sit down there and destroy my whole game. So I should just keep my mouth shut. But again, that's the thing I love about the stock market in particular, is that letting other people know about hot trades doesn't make it worse. It makes it better. Yet, you have to be one step ahead of everybody else. In other words, you've got to tell them to jump in after you've jumped in. You've got to inform them to jump out after you've already jumped out. Otherwise, you're the tail and not the dog. Talk to me about that.
Yeah. So one of the things that's important to understand about market trends and things of that nature is that, and you hit the nail on the head in regards to sharing the information. So when we do futures contracts, it doesn't matter if 1,000 of us take the same exact trade, although that's incredibly hard to do just because of timing. But everybody can buy the dip in something or buy in a supply zone type scenario, and everybody can ride it up, and they can all get out at different times depending upon their level of of success or goal that they're trying to hit. And so that doesn't impact me at all. So me sharing how we do what we do, only the number one thing that it does is it makes families wealthier, because now people are actually able to tap into what I would say has typically been classified as no man's land. In other words, we're over here, we're Wall Street, we're the stock market, we're the Chicago Mercantile Exchange. Only the elite of the best get to play in this field. And therefore, you can't come over here because you're not educated enough, or you don't know this enough, and things of that nature. And what's wild about it is that's always kind of been a hands-off type environment for most people. So because of that, because there was a fence there, a border there of some kind, whether it was mental or physical, it's mostly mental because there's nothing physical keeping people out of it, is that people would go on and do other things. And they would simply go into trading time for dollars versus, making time work on your behalf as a whole. And it's one of those cool, like in the note space, if I buy a note, then I own that note. Like, you don't get to participate. Like, Marshall, you wouldn't get to be able to participate in it, and neither would Jordan, because I own it, unless we did a partnership deal where all three of us owned it. But outside of that, that would be the only participation level, and then nobody else would be in the deal if we chose that. Whereas in the trading space, like you said, 1,000 people could buy Tesla today, and there's more than that do, and therefore everybody benefits as the rising tide lifts all ships. The cool thing about it is, in the trading space, at least in the future space, it doesn't matter to me what the market's doing. It doesn't matter if the market's going up or if the market's going down. It makes no difference to me whatsoever, because I don't physically own, say, like Tesla stock. So I don't own Tesla stock. My boys own Tesla stock. I'm going to be buying a lot of Tesla stock coming up, but I'm doing it as a long hold situation. I'm talking like 3 to 5 years. That being said, I don't care if the market's going up or down, and it only does one of three things every single day. Okay. The market's either going up, it's going down, or it's going sideways. That's all the market ever does. It goes up, down, or sideways. So depending on what it's doing would determine when you get in and when you get out every trade. And you don't have to stay in trades for long periods of time, because you're leveraging all of your trades, typically a 1 to 500 type ratio. So for every $100 I would risk on a 1 to 3 ratio or 1 to 5 ratio, I'd be looking at making $500 for every $100 I would risk. If I lose $100. If I win, I make $500. So let's say you trade 10 times, your 80% success rate, your $4,000 up minus your $200 in loss. So you're at $3,800 over 10 trades. Not a bad way to do a day, as a whole.
For sure. So let's make the transition, since today's
Yes.
topic is bulls and bears. And I know that you invest in a lot of different things. Obviously, I've known you for years because not only are you a very, very successful investor, you're also an extremely successful instructor or teacher of investing. And yet one of the things I admire about you is that you have had success in many different areas of investing. You just mentioned note investing. You just, obviously, we've been talking a lot about stock investing. You also invested, from my understanding, in Forex and currencies and precious metals, gold and silver and stuff like that. What do you think, both the beginning investor and then maybe a more experienced investor, what should we be looking at? Where are we going to see the most dramatic moves? And of course, nobody can tell the future. And I was listening to somebody chat with a friend of mine a couple days ago, and they were just talking about where things are going to be. And I always kind of giggle when I hear somebody say, "Oh yeah, Bitcoin's going to be at $120,000 in 30 days." And I'm going, yeah, where did you get a crystal ball? How in the world could you possibly know that all indicators say? And those are the people I run away from the fastest. If somebody just says, "I don't really know, but here's what I'm thinking about this," that makes more sense to me. So what are you thinking are going to be the bulls, the stuff that we should be taking a look at and investing? You already mentioned Tesla repeatedly, and I would agree. I've cleaned up over the years on Tesla on numerous occasions. I only wish that I had bought Tesla when Elon Musk was involved with Doge. I really do. When it got crushed and everybody's burning all the Cybertrucks down, I wish I had made a move then, because it would have been major.
Yeah, it would have been a major move. So staying on that one topic there, Tesla is going to be a great buy hold strategy. SpaceX is another one I would be watching out very closely. They're coming out with an IPO. A friend of mine is spearheading that for Elon. He's actually an old business partner of mine. Him and I were
tell
on
me why you think Tesla and SpaceX are good investments.
Yeah, so Tesla, if you look at the deal that Elon just got, he has a deal that he will get paid $1 trillion, but as a salary, as a payout, but it's a performance deal. Okay, so it's a performance deal. And people kind of chuckled about it. They laughed at it. They turned their nose up at it. So this is crazy. This is insane. But Elon said, no, this is a performance deal. So if I hit these metrics, these certain levels throughout the next 5 years, then I'm going to get my money. Well, he's going to go get his money. He wants to be the one-time guy that got paid $1 trillion, go down in history. He's going for that. So, and he said very clearly in his press conference, and a lot of people, turn their nose up at it. He says, if you're going to bet on me, I'd be buying Tesla. Because that's where that's where his paycheck's going to come from. And Tesla's already moving from a car company. They never were a car company. People think they're a car company. They're really not. They're just mobile data devices is all they are, wrapped up in a cool shell. And they do some cool things. Don't get me wrong. I'm not anti-Tesla. But I'm looking at the bigger picture like he is, and he's using it as data. He's building data centers. He's collecting data. He's thinking like 20 years ahead of everybody else. Everybody else is on the car lot buying a car, thinking this is going to be cool to drive for the next 2 or 3 years. And he's like, yeah, I'm going to take your data and I'm going to go over here and I'm going to build robots and I'm going to build self-driving cars and all these other things. And that's exactly where he's at. So to hit $1 trillion payday, he went in and negotiated all of that before he started releasing his ideas. So he's not a foolish man by any stretch of the imagination, but it's a buy hold scenario. So if you haven't bought Tesla, I would buy some Tesla. I would get your kids to buy some Tesla. And I just told you, I don't own any Tesla right now. My kids do. I'm going to be buying some here myself. But I'm buying it as not a scalping or day trading type model. I'm buying it as a buy hold. We'll put it in our family trust and our family bank, and we'll let it just sit there for a while. So that's number one. Number two, metals. Watch metals. We have,
I think people don't understand that as a precious metal,
Yeah.
silver is in a completely different class than everything
Yes.
else. And can you explain to everybody why that is?
So silver is a byproduct. Okay, you can't just go out and mine silver. Silver is a byproduct of zinc. Okay, people don't realize that. So they have to mine zinc, and after the mining process, they end up some of the stuff they end up with is silver. There's other things that they end up with as well. So it's a byproduct. So they can't just go out and dig up gold. They can't do it like they dig up gold per se. So that's number one. Number two, silver is a major conductor of electricity. So that is becoming a huge thing with all of these different data centers that are not only being built here in the US, but are now being built throughout the world to, to support this 5G technology, to support these cell phones and tablets and computers and stuff like that. The higher, the processors and computers, all of these things that we have, adapted into our lives, whether you're anti-tech or not, that's a whole different conversation, but it's a part of everybody's life. It's also being bought up and held. And so because it's a precious metal, it's for lack of better words, it's always been kind of known as a poor man's gold, because the barrier to entry on it has always been very, very low. And now it's starting to move in an upward direction. Gold has moved drastically, even though it dropped the other day. It has moved drastically as well. Gold is a precious metal as well. And it's one of those things that they have to tear up a lot of earth to get gold. So it's one of those things that they can only mine so quickly. You see a lot of companies or countries are stockpiling gold, have been for quite some time. U.S. is the number one holder of gold, even over China. China's trying to catch up with the U.S., but the U.S. still holds more gold than any other country in the world. But these are things that you can buy from a physical standpoint. So you or I could go to I wouldn't say a pawn shop. I wouldn't buy from a
local
pawn
coin
shop.
shop, precious metal
Coin shop, precious metal shop. And we can go in there and we can buy an ounce of silver or an ounce of gold, or you can buy it in fractions as well. There's things called gold backs. I should have brought one to the show today. I didn't think about it, but gold backs is a form of currency that's gold as well. It works kind of like they have them in denominations.
Silver certificate.
It's that kind of style of thing. That being said, these are things that are going to be in high demand as things build out. And so if you're holding on to it, you're holding on to the physical aspect of it, it's going to continue going up in value. Now you can buy silver ETFs and things like that. That's more of a stock type trade. And that's not a bad move either, because it's going to keep going up. You can buy mining stocks along that line as well, but you're not holding the physical stuff. I taught my boys something my grandfather taught me when I was very, very young. And my grandfather, he owned an accounting firm with next door to it was I will call it a mini Office Depot is what it was. So he was like Office Depot before they came on the scene. And people would come in and pay in cash all the time. And every evening, my grandmother would settle out the books and she would go through all the change and all that stuff. And one thing she would do is she'd pull out all of the silver coins, silver 50-cent pieces, silver dollars, things like that. Anything that was pure silver, she would pull out and she would replace it with something else to balance the books. Well, he was a big collector of coins. And the reason he did that was to start his own banking type model. So he knew back then that these things were going to be of value in the future. Now, unfortunately, he passed away in 1992, but these are things he taught me when I was a teenager. And so I've been teaching these same things to my boys. And for the last 4 years, I've been taking them to things like coin shows and stuff like that, where they're actually using their allowance money and buying 1 ounce silver bars. My one son, Parker, has a niche. He's got an eye for finding really rare coins that are undervalued, underpriced at these shows. He does very, very well with that. And these are things that they just love doing. Now, they're sitting on literally their own bank of gold and silver and that's going to continue to increase in value. Last year, they were up 147% on their investment. Now, I don't know anybody else who beat that last year outside of maybe Nancy Pelosi, but that's a topic for a different conversation for a different day. But nonetheless, Parker and Camden have done very, very well. But my recommendation, copper is another one to watch really closely. It's sitting at a little bit under $6 right now. I can see that getting into the $20 range here in the next 12 to 18 months. So it's once again, that's the new poor man's gold is copper. Silver's still very affordable. It's running around 65 or 75 an ounce right now. So still very, very affordable. Silver's going to be one of those ones that in the next 12 to 18 months, you can see it pushing $200 an ounce. I'm even hearing from various other experts on the streets that people are projecting it to go as high as 1,000. I don't know if it's going to get that high anytime soon, but I can see that over a 3 to 5 year time period, especially as more and more of this stuff gets eaten up. I don't think people realize these data centers, how incredibly huge they are.
And how much silver they need.
Yeah, it's insane how huge these things are. And
would you say that the press on silver has more to do with the industrial uses of silver than it does of silver being a precious metal?
Yeah, absolutely. It's more about the using of it, the using it up, than it is about anything else. And it's not from a jewelry store perspective by any stretch. It is definitely the industrial side of it, and how it's one of those things that makes our world keep moving. Our cell phones, our computers, the streaming, all of this stuff is based on silver being used. Silver.
What are your thoughts on infinite banking or people becoming their own banks?
Well, I like infinite banking. I wish that was something my grandfather taught me as well. I wish I would have stuck with it when I was younger, and I'd have a lot bigger portfolio if I would have done it when I was younger. But I didn't understand, when you're 20 years old, you're not really thinking about being 40. The 40-year-olds, those are the old people, that kind of stuff. So I had very
every day
short-sighted thinking when I was 20. And so although I was involved in it, I wish I would have done more of it back then. I do like it as a tool that you can use to build wealth across the board. I think you can do amazing things with it. So I do like it. I absolutely like it.
Obviously, politics and what's going on geopolitically in the world impacts all of us. I don't know what your political standings are. I don't hide behind anything. I'm a full-on Trump supporter. I'm a conservative. I believe in God. I believe in borders. I believe that we're dealing with a lot of insanity right now. But I also believe that even in the midst of all this insanity, riots nonstop in blue states, always seeming to come on the tail of fraud being exposed. All that said, though, I happen to think we're in the greatest of economic times. Trump's already been floating some ideas. One of his ideas was eliminating federal income tax from people making $200,000 a year or less. He's also floated the idea of eliminating the IRS altogether, so no federal income tax at all. Obviously, tariffs are playing a big part in our economy right now. Some people are misinformed as to what tariffs are specifically, but even more confused as to what the impact of tariffs are on the economy of the United States. Trump's telling the UN, we're not funding you anymore. The UN immediately says, oh my God, we're going to go out of business, which if anybody is halfway smart, they realize if one country pulls out of the UN and it's going to bankrupt the UN, then that one country was funding the whole UN.
Yeah.
And so I support pulling out of the UN. I support the United States defending itself first. Tell me what you think. And again, you don't necessarily have to tell me where you stand politically because I don't care. But what do you think about what Trump's doing as far as its impact on the economy through 2026, 27, and even toward the end of his presidency in 28? What do you think economically is happening? What do you think are the best plays? We're coming up to the top of the hour. By the way, as we're coming up to the top of the hour, and I know you've been digging the conversation today because I certainly have been, and you got a question for Troy or even myself about investing or about anything even unrelated to investing, Troy's going to stick around. He's going to be available to answer questions. I'm going to be here. So whether it's sex, money, power, or where you'd be putting your next $10,000 investment, we're here to answer those questions. We can only take about 4 or 5 calls per show, so you want to get into the queue as quickly as you can. If you're having a hard time getting in the queue, go to marshallsilverlive.com and register for an account. As soon as you register for the account, then you can call in and you'll be able to get on the air. So if you want to get on the air, place your call now. Go to the website, marshallsilverlive.com. Make the phone call to 877-SILVER1. Let us know what you want to chat about. What do you think politically is the impact on the economy with what all the stuff that Trump is implementing right now?
Yeah, so I've been a Trump supporter since he started his political career. And I don't always agree with everything he says or everything that he does. But I spent a lot of time in New York doing business, and that's just the standard. That's just the way New Yorkers function. Like it or not, and I'm not saying that's bad because I'm married
they're
to
blunt. They're blunt. They're to the point.
They're blunt to the point. And I'm married to a New Yorker. She's from my wife's from Staten Island. So I get it. It doesn't offend me. And things
so that's why you're sucking up to a higher degree.
Exactly.
Good for you. Smart man.
But so to your question, Trump's a businessman. He's not a politician, and he functions like a business person, which is the opposite of politics as a whole, at least from the standpoint of an exterior, how you say, shell. Politics has always looked to be how you say we like them, we don't like them, that kind of a thing. But at the end of the day, they don't ever seem to get anything done. And in politics as a whole, it seems like everything the government touches falls apart or becomes highly fraud and problematic down the road. But we typically don't find out for about 10, 20 years. And then we're like, oh, wow, that was really going on. Yeah, that was really going on. And so
like
I think
the high-speed rail here in California, or like all the Leering centers in Minnesota. We just don't know till it's so far after the fact.
Exactly. And then by the time that happens, like, who do you hold accountable for it? Because everybody's doing this thing. Everybody's pointing fingers at this, even from the onset of it. Those people have disappeared or the money's gone and those kinds of things. So it becomes one of those things like, who do you prosecute? Who do you go after? And that's a whole different topic. But back to your original question, and I think Trump's situation, and we can just talk about this one thing, and that is the abolishing of the income tax, I think would be a brilliant idea. It shouldn't have been brought about to begin with. And what people don't realize is that our country functioned on tariffs prior to the inception of the IRS. We got rid of tariffs and went to income tax to replace the tariffs. So Trump said, no, let's bring the tariffs back and get rid of the income tax because we'll make more money on tariffs than we will income tax. And
we'll make more money with the velocity, the speed and frequency in which the money's moving in the United States, in the borders, by keeping the money here. I don't know how much you travel around the world. I've talked about this on the show before. If I go to China, which I've gone to many, many times, if you want to buy something that wasn't manufactured in China, you're paying 100% tariff. You're paying double for the same thing that you would buy there in China. And most people don't realize that's what's allowed China to thrive. But the other piece that you just brought up is that the Federal Reserve and the IRS were formed simultaneously. That should give you a clue as to the manipulation. So go on. You think it's a great idea if we eliminate the IRS and federal income tax, go back to the idea of the entire country being funded by tariffs. But anybody listening, because I preach about it and rant about it all the time, give us your take on tariffs and what they really are so that the morons that might have stumbled upon my show can quit complaining and saying Trump's destroying the economy with tariffs. Please tell us from another voice your opinion on tariffs and why they're the smartest route to go.
Yeah, so what tariffs do is they basically backcharge the other country through allowing them to sell their products into our country.
The biggest consumer base in the world.
It's consumer based. That's all it is. And the thing about it is
30% of all buyers in the world in the United States.
Absolutely. So as a consumer, just like they do in China, if I go to China and I see something that's American made and it's 100% more than something that's made in China, I have the choice as a consumer to pick this or that. Okay, I have that choice. So I'll pick whatever, aligns with what I need in regards to what it is I want to accomplish, and I'll move forward. Well, the same thing will happen here in the US. Not to mention, we will be bringing more things back to the US as far as manufacturing and things of that nature. You'll have more job opportunities. You're going to create a different, skilled labor force as a whole, or workforce. Let's just say workforce. So there's a lot of benefits to having things. Number one, tariffs. Number one, but number two, bringing things back to the U.S. so that's built here. And I'm not talking just about data centers. Data centers are a different thing, but I'm talking about manufacturing of things,
everything.
Cars, things like
iPhones, cars, yeah, everything.
All of that stuff. Even Tim Cook's is working on bringing the iPhone back to the U.S. And what people don't realize about Tim Cook and Apple is that for years, I mean, I'm talking like decades, he has been hoarding or harboring massive amounts of cash outside of the U.S. through foreign companies. And so all these phones that are coming over from China, the profits aren't coming into the U.S. A small percentage of it is, but the majority of it is being held offshore. And so it's not even being taxed.
And my understanding on the Apple equation is there's almost $1 trillion in cash.
Yes.
In Ireland right now,
yes.
held by Apple. And that's one of the things that I don't think everybody's paying attention to. Trump's not only using tariffs to make sure that the U.S. consumer is held in high regard, that other countries that want to do business with U.S. consumers must pay that tariff or move their manufacturing to the United States, which makes complete and total sense.
Absolutely.
Because now the revenue's made here, the workers get paid here, they spend their money here, everything works. So one of the things that I also saw that Trump was floating is a one-time grace transaction of companies like Apple that have hundreds of billions, up to $1 trillion in cash sitting in other countries, growing in other countries, being able to bring that into the United States without any tax consequence so that cash can be put into the system. Imagine if all of the top manufacturers in the world bring their business and bring all their cash reserves from other countries and put them in the United States. Not only will we have more U.S. workers because the factories were brought here, less illegal people in the country taking cash, taking benefits, taking all of that. So all of that burden is gone. But now we've got employment at the highest possible levels. Yes. Will things be more expensive? Because that's something you just mentioned. I don't know what level you are. I'm level 63. When I was a kid, right, after World War II, it was a badge of honor to buy an item that said made in the United States.
Oh, yes.
And most people, when I was a kid, before I was in my early teens, you'd pick up something, and if it said made in China on the bottom of it, which, by the way, these bills are, if it said made in China on the bottom of it, that you would just put it back down. You say, I can't buy that. I got to buy something made in the USA.
Yes.
That's the patriotism we got to get back to, because that's what's good for the country.
Well, and back then we used to make the quality of products were so much better when they were made in the U.S. When it transferred outside of the U.S., it's become a throwaway society in so many different ways. And that's a byproduct of so many issues. And we'll save that for another call, another day. But back to answering your question about tariffs. Number one, I think it's great for the country. Number two, I think he's moving us in getting rid of and abolishing the IRS, which by the way, everybody should be on board with. Because if you abolish the IRS and get away with the income tax, literally across the board, everybody's going to get to keep 20% more of their money. In other words, you're going to get to keep your whole paycheck or darn near close to all of it. And so I don't know how that's going to impact Social Security, but nonetheless, you understand where I'm coming from. And so that's a huge, and we talk about being democratic. That would literally be the only thing that they've done in DC that is truly democratic in the last 40 years is give everybody their money back. No matter I say economic level they're at. You mentioned 250 and below, which I think the majority of Americans sit in. There's a very small percentage that are above that, but that would be huge for everybody nationwide, and that would help to stimulate the economy. That would help to pay down credit card debt. Right now, we're sitting on $1.6 trillion in credit card debt, U.S. credit card debt. Prior to Biden taking office, it was $400 billion in credit card debt. So
it's boggling.
Americans have literally been living off of credit card debt through the entire inflationary Biden era. And how do you say, just putting on a happy face and going about life. And that's
I think we all were kind of curious what the world was going to look like after the scamdemic. And I think that was the challenge for everybody, is we just said, hey, if the world's coming to an end, I might as well flame out than rust out.
Let me say, I want the last check to write. I want the last check that I write to bounce, type of a thing. Yes. So, it's one of those things where I think Trump is spot on. The other thing I'd love to see him do is abolish the property taxes on homeownership. Property taxes are out of control. And I'm one that I have a pet peeve about it, because I homeschool my kids. So I still pay my property tax and I still homeschool my kids out of my pocket, no tax deductions, no tax benefits, no nothing. It's simply, I do it because I want to change. I want a different future for them than the public school system or private school system would ever give them. Now, I know that's not for everybody.
We're paying taxes that are paying for public school, and we're homeschooling our children. We should get a tax credit for that at the very least.
We should get a huge tax credit for it. And
I agree.
80%, if you look at any tax bill, like 70 to 80% of it goes to the public school system in that city, that area. So like, I'm literally just burning cash. Like, I could just light a fire and get more value out of it than giving it to them. And what's wild about it, here's what's wild about it here in North Carolina where I live. If I want my boys to play on the football team for high school or the track team for high school or something like that, they have to enroll in the public school system and take classes at the public school system. Like, I can't just put them on the team, or they can't just try out for the team as a whole. So I have to still enroll them, which we haven't gotten to that level yet because they're only 13. And my boys race BMX is what they race. And so they do a very, different category of sports than most kids do. So,
sure. We're at the top of the hour, and so we're going to take a short break. If you are watching the show right now and you are digging the conversation, and I know you are, and you want to get in and ask Troy a question, or maybe you have a question about your relationship, your health, any area of your life, for those of you that are not familiar with Marshall Silver Live, it's a real simple format. In the first hour, we teach content. We bring on amazing guests like Troy. And in the second hour or so, depending on how long it's interesting to me, we bring you on. So you can ask your questions of myself or our guests. And every single person that calls in, without exception, gets paid $100 cash. It's not really difficult. All you got to do is dial 877-SYLVER-1. Don't even do the dash. Just dial 1. 1-877-SILVER-1. You'll get on the air. When you get on the air, you'll get $100 cash every single time you call in. Doesn't matter how dumb your question is. Doesn't matter how insignificant you think the question might be. Call in anyway. Let me bless your life. Let me buy you and your significant other a nice dinner tonight. But at the very least, let me know that you're digging the show, you're digging our guests, and more. Today and next week, by the way, we'll be on Monday, but we will be dark the other 4 days of the week. So today and Monday are the only 2 days you'll be able to do this. Why? Because next week, no, not next week. Forgive me. Next week, we'll hear every single day except for Thursday. And the reason we're not here on Thursday is we're celebrating my daughter's birthday, and we're going up to Disneyland on VIP tickets. So, by the way, if you're inner circle and you're watching the show right now, I've got 2 extra seats on our VIP tour to Disneyland next Thursday. So you give us a call at the office, and if the seats are available, I'd love to have you come with us because I pay for them all either way, and I'd love to have some Inner Circle members as my guests. But next Thursday will be dark. The following week will be dark every day except for Monday because we've got Turning Point going on. What's Turning Point, you ask? Glad you asked. Turning Point is a 2.5-day event that will change your life forever by helping you reprogram the thoughts that are in your subconscious mind, teaching you the skills of irresistible influence, and giving you back your motivation, programming right into your subconscious mind the drive and determination that you're going to need to make 2026 your best year ever. When you call into the show today, you're not only going to receive $100 cash, you're also going to receive 2 tickets worth $3,000 apiece to Turning Point, all just for dialing 877-SILVER1. I know your finger works, so get your finger moving. Dial the number on your screen, give us a call, and get on the air. It'll be one of the best things you've done for yourself today. To give you an idea of what it is like at Turning Point, we'll watch this video. When we come back, I'll be in the vault, and once we're in the vault, you can address your questions to me or to Troy. So give us a call right now. Take a look. This is Turning Point.
Turning Point. A total change in direction for the better.
Who here is ready for a turning point? You absolutely have to have one. Put them high.
The 2-day Turning Point seminar is different than any other program in that it does more than just teach you the skills for your relationships, wealth, and power. It also programs you on a subconscious level to put those skills into immediate use.
This weekend is about empowerment. This weekend is about you understanding how to take charge of your own life.
You will learn total control of your thoughts and emotions, how to use PND, or psychoneural duplication, to take on the thoughts and actions of others to produce similar results. Whether it's losing weight, changing habits, being a millionaire.
When you think what a millionaire thinks and you do what a millionaire does, you'll produce similar results.
You will learn to program these powerful tools at a subconscious level for immediate and lasting results.
Your conscious mind is what's called your critical factor. It's the mind you're using right now to determine whether the information I'm giving to you will work for you or not. Your subconscious mind, on the other hand, is merely a computer. It's non-critical. It doesn't even have the ability to make judgment. So all trance, hypnosis, reprogramming is setting aside the critical factor of your conscious mind and non-critically accepting suggestions.
And empowering.
To make a fear vanish, you must experience it fully.
As it helps you create your life exactly the way you want it. Bring your family closer. Find the love of your life. Create strategies for wealth. Learn irresistible influence, and so much more. Because of the intimate nature of this course, seats are very limited. Register now before your life passes you by, and there are no more turning points for you. Tens of thousands of people have learned this information and are using it daily.
You don't get angry if you get fired from your job and you know that within 2 years you will be a multi-millionaire.
It's your time.
There's a way for you to win this game that is different than how you're doing it, and it works.
It's your life.
When you learn how to do that, you become more powerful, and power is for use.
It's your turning point.
We're back at Marshall Silver Live with today's guest, Troy Fullwood. Before the break and before we entered the vault, Troy, we were talking about some bulls, some stuff we should be taking a look at. You mentioned Tesla. You mentioned precious metals. What are some bears? I'm going to interject one and just ask you about it. Obviously, with the Epstein list coming out and Bill Gates being all over the Epstein list, Microsoft is tanking, as it should if that is the case, 100%. Yeah. Microsoft's tanking, so that's clearly something people should be bearish on. In addition to Microsoft, are there any other stocks or any other positions, real estate? One of the other ones that I believe, and a lot of my friends aren't going to like me saying this because they're involved in the business, my belief is that single-family investing is not a really smart thing right now. And my opinion of why it's not a really smart thing right now, notes are completely separate. I'm not talking about notes. I'm talking about single family properties. Part of my belief is that we are still, even though I believe about to reach some really good positions financially in the country, I still think that people are recovering from COVID. They're recovering from not being able to pay their bills during that era. And while they still had electrical bills and the cost of living, food and such, cars and such, I believe that we're going to see a substantial amount of people still displaced from their single-family residence, moving into multifamily. And also, my experience right now, because we've been looking for a new home for Studio Money, my belief is that office real estate is plummeting, that more and more people realize from COVID that they could work at home, so they're not coming back. And that warehouses, industrial warehouses, are booming right now. They can't find enough of them, but they're also having to convert well built out, expensively built out office buildings and turn them into industrial warehouse type office warehouse buildings, with the majority of it being warehouse. What are some bears? What are some things that you think we should avoid?
Yeah, so the residential market as a whole is pretty flat nationwide. There are some hot pockets here and there, and there are some areas that are dipping pretty badly. But as a whole, I think it's going to be status quo for probably the next 18 months. Like you hit the nail on the head in regards to people are still recovering, and they're gonna spend this next as the money flows back into their checkbooks and their bank accounts and stuff like that. Most people will use it wisely and pay down the debt that they've got. So a simple equation is like if you want a 22% return on your money this year in 2026, pay off your credit cards right there. Like you're going to get it really quick. So, and that's just kind of an average thing. But back to your original point. So residential real estate is going to be very kind of hit and miss. It depends on the growth aspects. Like we're here in Charlotte. We're in a pocket that's pretty hot area, so we're okay. But I do see other areas that are pretty flat. I think Airbnb is pretty dead as a whole when it comes to investing. I think they're out there, but it kind of ran its course over time. The other thing that I don't really see the land area, investing in land and stuff like that. And if it's a personal thing for you, like you want a bunch of land, homestead, that type of a thing, that's a different conversation. But land investing's pretty flat as a whole. The industrial sector is very bullish. It's been very bullish for the last 4 or 5 years, primarily because of all the big warehousing needs with Amazon and all of these big companies, even Walmart and stuff like that nationwide. So I definitely agree with you there. You're going to see rates are going to come down. Interest rates are going to come down when the 10-year T-bill starts to drop, and that's slowly happening. But every time Jerome Powell lowers rates, it bumps the mortgage rate up. And people think they're one and the same, and they're not. They're two totally different metrics for finance. Jerome Powell is more about he's the commercial side. He's the money guy, or the rates in regards to, I say, borrowing manufacturing money to build cars and things of that nature. Steve Cook might borrow money to build iPhones, as an example. So rates there are a lot different. There are also commercial rates and things like that. The residential side of it, it's still hovering around 5.3% when it comes to a 30-year mortgage, fixed rate, 20% down type of a deal. And that's the wholesale number. That's not the retail side of it. So there's two different tiers. The average homeowner gets the retail rate, which is low sixes right now, high fives, low sixes across the board. So you will see that. Even if that comes down into the fours even, or low fives for the retail side of it, people aren't going to rush out there to do things unless it's a have to. Now, if it's a have to, that's a different ballgame. But they're not just going to, pack up and move houses because they got nothing better to do on a Friday afternoon. It's going to have to be very intentional when they do that. The pattern of scaling up for bigger, better trying to keep up with the Jones, that era is dead. That's gone away. Unless it's something that you wanted a dream house on the lake, that type of thing. That's a different conversation. But people have stopped trying to keep up with the Joneses, that methodology, that way of thinking. And so scaling up to bigger houses is going to be, I say, less and less, common as a whole. What is common in the housing market, and you're seeing a lot of this, is smaller homes, smaller lot sizes, typically 2-story, not 1-story type models that are selling in the $500,000 range. And that's become pretty commonplace for most Americans. Lennar's doing that. Pulte's doing that. All of the tract home builders are doing that kind of stuff right now. And that's just because cost of land and everything else is impacting it. So those kinds of things. But I don't know if that answers your question, but those are some bullish and bear things that I definitely would agree with you on.
You mentioned something, and I wanted to ask you a little bit clearer because I'm not.
Okay.
You said that the mortgage rates, the retail mortgage rates on single-family housing is not tied to the Federal Reserve's interest rate numbers?
No, it's not.
Tell me how it's not, because I thought it was.
So it's tied to the 10-year T-bill is what it's tied to. And as the T-bill has gone up, if you look at when rates were 2.5%, 2.75%, the 10-year T-bill was paying about like 3/4 of a point. And so what the federal government does is it puts out T-bills, it gets money coming in, it uses that money to then lend out in the FHA government lending programs and things like that. So that being said, in order to get more money in for housing, they had to create higher interest rates when it came to that because there weren't other places for money to go. So they did that during the Biden era. So they started bringing in all this cash and capital, trying to put it out on the streets. But inadvertently, it ran up the cost of mortgages, which then brought down the housing pricing across the board because they couldn't afford as much anymore. So housing prices dropped, which is one way to kind of offset the economy. But they used it during the Biden era. They used it as a way of hedging inflation. Because if the housing prices just kept going up, 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 that aligned with inflation going up, up, up. But the cost of capital was very cheap then, 2.25%, 2.75% for a 30-year mortgage, pretty sweet deal. So people were overextending themselves and stuff like that. So what they did is they mass produce a lot of opportunities that countries around the world started buying up U.S. 10-year Treasury notes, and that brought in a flush of cash that then went out into the market at higher interest rates. And so what they're trying to do, what the Feds are trying to do is to buy all of those back. And they've been buying them back from China and a few other countries to buy them back to get control and get their arms around that to start bringing the rates back down. But if you look back in 2020, the 10-year Treasury note was about 3/4 of a point. And hence, if your cost of capital is 3/4 of a basis point, and you can lend it out at 2 3/4 points, then you're making a 2% arbitrage on that capital, which is pretty sweet little deal when you're talking billions and billions of dollars across the board. But that's what changed it, and that's what's kept it. They still have to arbitrage that capital. Right now, it sits right at about 4%. So they're trying to get it down, but every time the rate, it goes up because the money moves from this market to that market. It shifts. It's just like the market's been crashing with gold, silver, gas and stuff. People are like, well, where's it going? It's going into the yen. Right. It's going into the yen. If you look at the yen, it's been going up, the Japanese yen.
What's your intention? What do you think is going to happen in May when Powell's replaced?
Oh, I think it's going to be great. Great.
What's going to happen? Is the interest rate coming down?
It's going to start the commercial lending, the prime lending is going to start coming down. My only concern is that they get really aggressive really fast when he comes into office. Hopefully he gets in there, he settles in for about 30 to 45 days, maybe even 60 days. And by the end of summer comes in and does like a 1/4 basis point, maybe a 1/2 basis point drop, and then throughout the rest of 2026, maybe by the end, there's a full point drop in the prime lending rate. You don't want to just kick the stool out from underneath of it day one, because that'll destroy the markets. Most of the time, and why you don't typically see huge movements in the market when Powell is speaking is because typically about 30 days before, he's kind of, I say, prime the pumps and let all the players know, hey, I'm going to drop this a quarter basis points, and I'm going to do it. He'll be talking about that mid-August, and he'll do it mid-September. So by the time the markets get to mid-September, they've already priced that into everything. So that's why you don't see a big up or a big down. Yeah, you might see a little change for 5 minutes or 10 minutes, but you don't see it drop, 600 points or anything like that as a whole. So that would be the smart thing.
We've got some calls, and I want to make sure we get to them because I'm having so much fun talking to you that I'm not really paying attention to the calls stacking up. So we got some calls.
Got in trouble again, huh?
877 Silver One, SYLVER1. And if you call in and you get on the air, I'm going to give you $100 cash. It ends up in your bank account inside of 24 hours. We just zell it to you immediately. All you got to do is call in. It's that simple. Our first caller is David Davila, and he's got some questions about emotionally trading and how to avoid it. So, David, welcome to the show. What's your question for myself or Troy?
Hey, how are you doing?
Great.
So for Troy, I really enjoy this call. Thank you guys for doing this call. I'm learning a lot. But for Troy, I have a question. Just how did you overcome your emotions when trading on bad days? You were talking about trading, revenge trading. So how did you overcome those bad emotions on those bad days?
Yeah, so that's a great question. The simple answer to that was I learned to walk away. Okay. When it's not going well, I learned to walk away and go do something else, whether it's go to the grocery store, pick up a few things, go wash the car, go mow the yard, go do something else, take my mind off of it altogether. How I really, really dialed it in was I have a very particular system that I use. And as long as all of it checks all the boxes, that's when I'll enter into a trade. And then it goes up or it goes down, whatever direction, we're bullish or bearish. And I have a system that's what I follow. Every time I don't follow the system, I get in trouble across the board. So that's what really helped me. In other words, I had to put some guardrails on myself. When you take your kids to the bowling alley and they have those little pop-up bumper things that come out of the sides. Yeah, I needed those. At age 60, I needed those. So I'm not afraid to admit that. But I did that because as long as I follow very strict rules, it works out. I'm not saying it works out 100% of the time, but it also keeps me from emotionally having that roller coaster ride while that trade's going on as well, because I know with an 80% success ratio, it's going to work. I also use stop losses. You got to use stop losses. You can't just throw it out there and hope that it happens. You got to, when I was talking earlier about that 3-to-1, 5-to-1 ratio, worst case scenario, I lose $100 and okay, I'll re-enter the trade. If it just pulled back a little bit and then it went back up, I'll re-enter and I'll jump right back in. I'll take my $100 loss. I'm still going to be net positive at the end anyway, so it's not a big deal. But just be disciplined. You got to be disciplined. If you look at the 1% of the world, they're very disciplined people. They just are. And it doesn't matter if it's about their health, their money, their relationships. It could be all the above. They're just very disciplined about how they live their life, and they're very intentional about how they live their life. And so you have to develop that. And you can develop it by practice trading, doing that, and don't revenge trade when you practice as a whole. Don't overtrade when you practice either. So if you look at any professional athlete, anyone, pick one, whatever your favorite athlete is, you have to keep in mind that athlete practices 80% more than they actually play the sport. So you look at somebody like Tom Brady and they're like, he's the greatest football player of all time. What they don't realize is that Tom practiced for 6 days to play on Sunday. And he played on Sunday for 4 hours, and then he went back to practicing for another 6 days. And you have to just do that as a whole. That's what develops your skill. But practice like you would trade. Practice like you would trade. Don't, like, when Tom Brady goes out and he practices, he doesn't sit back there and throw Hail Mary passes for 6 days straight. He runs his playbook. What's his playbook? Well, whatever Belichick told him it was, and that's what he ran. And he perfected those plays, and that led to all the Super Bowl championships that he has. But because he practiced well, he played well. If you practice well, you're going to trade well. And it eliminates a lot of that, because revenge trading, honestly, it's a byproduct of fear. It's a byproduct of anger. It's a byproduct of frustration. But all of those things are a byproduct of you not maintaining your own integrity with yourself. So in other words, these are my rules. I didn't maintain my rules. I'm mad, but I'm going to take it out on trading. But I really should be mad at myself. And I should like be looking at me, not trading, not Wall Street, not Trump, not Biden, not any of those other people, because they don't know who you are or I am. They're not against us.
Care.
Yeah, they don't care either. Good point. But does that help you at all, David?
Yeah, that really helps. It's just a small issue that I'm really helping. I'm 19, so
Cool.
the discipline I'm trying to learn, but I'm always come across when I have those bad days, and I just want to always just revenge trade, and and sometimes it ends up good, and sometimes it tanks my account and it's gone. And that's what I struggle with, and I'm just trying to focus on that, trying to figure like what other people do to overcome that, basically.
Well, a great
It's
example
those
is
stopgaps, isn't it, Troy?
Yeah,
It's just
it's
the
just-
stopgaps. Just saying, look, I'm gonna lose this much or make this much. And again, the analogy or metaphor of a blackjack table is ideal, because that's why I used to take so much money out of the casinos. If I lost 10 grand, I was done for the night. But if I was up 10 grand, I put the 10 grand in my pocket that I sat at the table with, played on their money. And I didn't really, I usually would have a $50,000 limit on the upper end if I'm having a good night. But if I had already taken my original bet off the table, talk to us about that. And by the way, David, you got another $100 to put in your trading account for calling in
Thank
again.
you.
So we're glad you called in again. It's a good way to feed your accounts. Glad you called in. I'm looking forward to seeing. Are you making plans to come out to Turning Point?
I'm talking to my dad. I want to go out there where I'm from.
Bring your
Houston.
dad.
Oh yeah, we
bring your
already
dad
been
with you.
before. We loved it.
I'd love to see both of you guys again. So come on back. So welcome to the show. I'm going to release you just because I'm going to chat with Troy for a bit. But thanks for calling in again. $100 on its way. I look forward to seeing you and your father again at Turning Point. You guys are loved. Take care. On that, Troy, just a couple more elements before we wrap up today's show. And I thank you again so much for being here. You're a joy.
Great. It's been fun.
You're producing phenomenal results for other people. I know you're doing live events, and I know you're helping people out. But would you say that is beyond all the knowledge of how to trade, beyond all the knowledge of how to invest in real estate or notes or precious metals, beyond all of that, the number one common denominator of why people succeed or don't succeed is not the market, it's not their tactics, it's not their strategies, it's whether or not they have complete and total control of their mental faculty. Would you
Absolutely.
agree?
Absolutely.
That's the bottom line.
Yeah, absolutely. You have to, we are our own worst enemy, as human beings. And if you just look at yourself as a human being, like when you look at the things that people do, you can change everything about your mindset. You don't have to live with bad habits or bad ideas or bad experiences and things like that. That's something in the past, and there's no reason to carry that luggage or that trash with you into the future, because it doesn't dictate your future. Your past does not dictate your future as a whole. It will if you keep carrying it along with you, because eventually it gets really smelly and stinky, and you keep hauling it with you, and you keep going, well, my results stink. And it's because you keep doing the same thing over and over again. And we all know that cliche about, the definition of insanity. But yeah, your mindset is 99.9% of everything to do with success at the end of the day. And it's funny because you look at that 1%, no matter what field of expertise they're in, they ignore all the noise. And there's a reason they ignore it, because those people are not in the game. The cheap seats are cheap seats for a reason. So let them be cheap seats and let that stuff go, and don't let it become who you are. And whatever challenges you have, just own it. Just own it. Whatever it is, bring it out into the light, because once you bring it out into the light, it no longer has power. And so shed the light on it and go, okay, this is what I need to work on. And literally, if you haven't been to Turning Point, come to Turning Point. It's a great, great program. My mom's been through it, by the way. FYI, Marshall, I was going through my
I didn't know that.
Yeah, my mom's been through it. Gosh, that's like 20 years ago, I think, maybe even longer. In Scottsdale, Arizona, at the I think it was the Radisson Resort there.
Very cool.
But I came across an old photo of you and me at Cody Sperber's event there in Phoenix, Arizona.
Awesome.
Back
Cody was just here at Studio Money.
Was he really? Oh, awesome. Yeah, I was going through cleaning up my phone, and I was like, oh, there's Marshall and I. Pretty cool.
The clever investor.
Clever investor, absolutely. You have to just really if you can master your mind, you can master anything. You honestly can. I'll tell you guys a quick secret. I'll tell you guys a quick story. And if we got time, I'll make it really quick. So we talked about Jordan earlier in the show, right? So Jordan's a great friend of Marshall's. He's a great friend of mine. He came into our trading program. He has blown the doors off of trading, more so than any other client we've ever had. And he attributes everything to attending Turning Point. Honestly, like he told me, like, Troy, had I not have been to Marshall's training and learned how to do certain things, like I would not be as far along as I am. Like he's chalking up capital in $150,000 increments, at least one a week. So I know he's probably well over $1 million. I haven't asked him lately, but I know he had about, last time I talked to him, like 7 accounts. So do the math on it. It's well over $1 million. And that was like 30 days ago. So he just keeps stacking this stuff. So he's like on a money magnet at the end of the day, because mentally he got rid of some things that were blocking those things from happening for him. And him and I have had, I say, green room type conversations about how we see that as being the biggest challenge for most people. It's not the exterior. It's not the environment. It's not the economy. It's not the president. It's them, like them and their mindset. And what is it that they want out of this life that we're all living and walking through? What is it that they want from it? And what is it that they want to give back to it? Because you have to serve as well as receive in this world. It's a two-way street. It's what I call the law of reciprocity.
You do a lot of events on the East Coast, and obviously Jordan and Amanda are back there on the East Coast. Will's back there. Obviously, their son, remarkably successful in his trading experience. I'd love to get you out to the West Coast. I'd love to have you teach some of the folks here at Studio Money. So I would love to continue that conversation beyond this conversation here on the air. In the meantime, though, for the folks that want to learn more about what you do, maybe get a hold of you and get some of your training materials, how do they reach out to you? Yeah,
so we've got a couple of different ways you can reach out to us. You can call our office at 480-831-5067, extension 1. That's our office number.
Repeat that one more time for me.
Yes, sir. 480-831-5067, extension 1. You can also contact me at troy@pinnacle-investments.com. You can contact me there as well. And happy to take in your questions and things of that nature. And then depending upon what direction you want to go and how we can help you, we can share other resources and stuff that we have. That's a great entry point for you.
Awesome, man. Well, Troy, it's been great having you on the show. I would love to have you come back again. Obviously, the markets are changing quickly, and I know you're on the cutting edge, so I appreciate you helping our audience out and helping them maneuver through the minefield that is investing in 2026. So thanks for being with us. God bless, and I'll see you soon.
Thank you, sir. Appreciate it.
You betcha. Hey, we have so much fun here at Marshall Silver Live. If you're brand new, if you just stumbled upon us, and I can see our numbers are growing daily. We had a record number of people on the stream today. That's awesome because we're still testing. We're I think this is 10 days old. We're 10 days old with this live broadcast. Glad to have you with me. You're going to receive $100 cash every time you call in. Why? Because I like to bribe you. You're going to receive $20 every time your friends call in if you told them all about our show and sent them to marshallsilverlive.com on your affiliate link. Lots of cash to be given away. I'm not stopping. I've already given away over $350,000 in cash on my live broadcast, and we're just going to keep escalating it for you. I'm very excited. On Monday's show, I've got a very special guest. Her name is Tracy Walker. Not only is she a remarkable marketer, she's also a person that doesn't take no for an answer. I've watched her succeed in every single business I've ever seen her be a part of. Massively successful, incredibly driven. She's an outstanding mom. I watch her posts with her and her kid, and she's a remarkable mom. And more than that, she's also a black female conservative in America and all that possesses and all that creates. So on Monday, we're going to talk to her about marketing. We're going to talk to her about raising kids in this day and age. And we're also going to talk to her some pretty in-depth questions about being a female black conservative and the attacks that I've watched her receive online and the grace with which she's handled people that are completely out of line and yet still triumphs above it all. If you've ever felt like people were attacking you, if you've ever felt like the odds were against you for whatever reason, come join us on Monday for a no excuses interview with a great personal friend of mine, Tracy Walker, that I promise you is going to end up blowing your mind. Your life's going to be changed forever. You're going to want to tune in every single day. Plus, coming up next week, I'm also going to bring in my pastor to this show live so he can tell me why I have so damn many questions about the Bible. If you're digging the show, make sure you share the link for Marshall Silver Live with your affiliate address on it. You get that at marshallsilverlive.com. Share it all throughout the weekend. Tell everybody to come tune in on Monday and every day, Monday through Friday, for the show live so that they too can not only have a better life, they can also make some cash on the spot. I'm Marshall Silver. You are totally loved. Together we got this. Remember, have an awesome weekend and celebrate life.